This is like we got to take a selfie on our video. This is fantastic. So listen, we're here on the balcony of the stock exchange. We're wrapping up 2024, one of the greatest years of all time. Number one tech analyst in the world, one of the top journalists in the finance business, in my opinion. We're just going to kind of shoot the whatever here and try to run down the year for you, break it down, make it accessible and fun, and give you a little idea what everyone's opinion are about the year. How about you? I'm going to pitch it to you and come on, talk about 2024.
I mean, this is my favorite time of the year to look back and see what the guidance was this time last year. What are the smartest
What was it?
Wall Street strategists? No one got it right, but they were all wrong to the downside. The most bullish voices this time last year. There was, Oppenheimer, Ed Yardeni. They were still off. No one expected the 25 to 27%.
What was the average S&P target going into?
Didn't have a 6 in front of it.
No. The average was maybe 56, 5,800 or so. People saw like an 8 to 10% gain, but citing a lot of those headwinds those headwinds just didn't really come out.
And a lot of them held their ground. They didn't step up in September, October when it was clear we were going higher. This gentleman, we have it on tape. In February, March, he said there's going to be a 6 in front of the S&P by year end, and there's going to be 20,000 in the NASDAQ.
Well, I think part of the thing is, like, as strategists, they're always like, they become so hyper focused on, like, whether it's Fed, 10-year, some of the macro data, what could or might not happen. And I think that, as we've said, I think the one thing that they've underestimated is this once in a 40-year tech boom. I mean, when you have $1 trillion of AI CapEx, you can't find that in the spreadsheet. Yeah. And I think that's the big thing that's pushed this market high. And I think also it's a thirst for risk too.
Right.
Well,
I think that's important for us to note because we're in a new generation. I know that the new retail environment, the democratization of the trading community is new, and a lot of these 40 million new retail traders are just day trading. They are, even themselves in who they are, they're young, not untethered, well, a little bit untethered, but they don't have a lot of experience in the industry. They're not the ones who've been trading this, but a lot of the old timers, people who've been in this, did not put on the new the pink colored glasses. Things changed post-COVID. People still use terms like recession, depression, the yield curve inversion, all that kind of bear market, bull market. Those terms are irrelevant in a market that you can actually be, by definition, in a bear market at 11 in the morning and a bull market at 3:30 in the afternoon. There's new rules here. It's like Bob Mayer, what's his name? The guy on Sunday night? John, what's the talk show guy? Bill Mayer. He always talks new rules, right at the end of his show. They're new. We have new rules here. You and I are willing to accept the new rules and make our judgments about markets based on new rules.
I do think you're right. I think there's some people, they're still living in a world where, like, after I talk to them on valuation, I feel like Knight Rider's going to be on TV. We're Silver Spoons.
Exactly.
Sure.
Pick your spot. So it's like, I think there's some of that where there is a new reality and there's a new, like, in terms of retail that's coming to the market. And I think some of that, like, multiples, in my opinion, are maybe permanently going to be high. So I do think there's some of that playing out too relative to growth.
I wonder for you guys, are there hard lessons, are there hard things to kind of teach younger investors who may have only gotten into this game, whether it's investing for the underlying fundamentals of wealth management, or they're doing what you and I talked earlier today, they're engaged in these zero dated options, they're looking at expirations at end today or end tomorrow, they're in quick and they're out quick, but they've been doing this in a cycle, where we've had this AI boom in the last few years. Maybe they haven't really seen the ups and downs of the market. You guys who have been around the block, respectfully, a lot more, and you're a lot more seasoned, what advice do you kind of give a lot of, maybe younger people? I think there's a lot of impatience for younger people, whether it's zero dated options, they're playing a short speculative game as opposed to the fundamentals of true long-term investing and wealth advisement.
What advice I would give them.
Right.
Okay. And I know the answer to the question. So as I said, I was in Dubai recently. I was at a conference. It was an FX conference, but it was all about trading futures and all these things. And there were 18 to 25-year-olds, thousands of them, and they were all millionaires. They had gotten into the market young. Their first inroad to the market was the meme phenomenon during COVID. They had never traded the market. They didn't know anything about the market. During COVID, they all got a couple $1,000s and a check. They were watching Roaring Kitty on Red. What's it called?
GameStop? Oh, Reddit.
Reddit on Reddit, sorry, on Red Bull too.
On Red Bull too.
They were watching Reddit on Red Bull, but their only relationship, their only inroad into the stock market, it is this time that has experienced new rules. Sure. They've never seen markets go up and down. They basically only seen markets go up. They've never seen, we're at a pace now, right, where, as I described, you can be a bull market in the morning and a bear market by definition. That's a 10% move from the last sale. These are things that the way this market, as I jokingly was said to Dan earlier, when I was a kid, I'd watch Walter Cronkite and he'd go, the market was very volatile today. It was up 3 points. That was the way the Dow Jones used to move. Well, obviously that's not it. And I think that's jaded us a little bit, that 1,000-point moves are not a big deal to us in the industry because you've just gone up 20%. But for them, it's still a big number. So their perspective is a little bit different. But these young traders are still really cowboys and Indians, okay, in the biggest way possible. They're not risk averse. They're all about risk. These are young people who have been, watching Jackass or riding skateboards off of cliffs, doing wild and crazy stuff, tatted out and whatnot. These are the people who are now trading the market. So while in a way, the more crustier, more conservative Wall Street types with we don't want them included in the business, right? This is a Brooks Brothers story here. When to me, I think for me, I'm an inclusive person, not an exclusive person, and I think that's exciting new blood and new energy in the market.
I think that's actually been the biggest mistake of institutional is discounting retail. I'm smarter than them, and I don't mean this like on meme style, but I'm talking about like on some of these stories like a Palantir, Tesla, that the reality is in some retail, like a Palantir was ahead of institutional. Institutional had to catch up. So my advice would also be like, do your work, learn from your mistakes. If you it's a trading mistake or a stock, learn from it. Like, I think ultimately, in 25 years doing this, our best successes are because of our biggest failures. That'd be the one thing that I'd say is when you mess up on a trade or things go against you, don't just sit there.
Journal it.
Don't just sit there lights shut off, listen to Journey music, eating Chinese food. And Journey is good, I'm a big fan.
As is Chinese food, yeah.
I'd rather have sushi. But now we're getting off topic. But the point is, I'm just saying learn from your mistakes.
Look, it's really important. I saw with these guys that, we run a trading academy, and we always talk about there are rules about successful day trading. The biggest rule is have a stop order on every trade you make. Identify your downside risk. Okay, that's the bottom line. Have a plan when you get into a stock and have a stop order on every trade. And we would say to these, we have 1,000 people on a webinar, so how many of you use stop orders? 99% of them don't. They don't want to lock in, they don't want to ever take a loss. But they will eventually, it's the funny thing about the stock market is, eventually you're going to have to accept the loss. But they're cowboys and Indians in the biggest way. And so we use a mental stop. If you're using a mental stop, you're mental. They keep moving their stop orders. So you know what, they are not a risk averse. They love the action. What I find similar about them to me is, and to Dan, they love, for them every day. I'm on a Twitter space with 4,000 young day traders now. Okay, this young guy named Jordan, right? Thousands of these kids every morning religiously on this Twitter space talking about their trades, making money. There are more young retail millionaires out there. And then, they're the haters. They're full of it. They don't know. They're showing off their Bugattis. Well, look, if you were 19 and you made 50 million trading the market, you'd probably post a Bugatti online also. So let's get judgmental, right? But because there's this young guy named Noor who was inspired by me when he was 14. He stood outside the stock exchange for 2 years waiting to meet me. He did. I got him an internship. Now the kid makes 25 million a year trading the market. And he posted a picture of a Bugatti, that he bought, and he bought a house for his mom, and everyone's hating on him. I'm going, get over yourself. But anyway, they love risk, they love the market, they love the adrenaline, they love all that. They're willing to take big hits in order to make big wins. What the advice I can give them is, and I do give it to them on a daily basis, is nobody got broke taking a profit. There's no in shame in losing and in analyzing your look. We tell them to journal absolutely everything, right? But at the end of the day, at one point, this strategy is going to kick you in the butt, right? Because this market is not very forgiving. One of the taglines I use in this new market is, when we were trading back in the old days, right? You had earnings were going to come out. He put out an earnings alert. The stock looked like it was going to do a little better on earnings, a little better on guidance. You'd buy the stock, earnings would come out, it would go up $1.50. You'd take your profits, move on. Now it either goes up $1, you're going to be lucky for $1 or wrong for $50. Earnings can be good, or guidance can be good, and the stock goes down $50. Yeah. It's not a very forgiving market because the way things went on the way up, they're going to happen and so I know these guys are not. I said, please be honest with me. Have you ever lost? Some of these guys have taken $1 million hits. They're not going to tell anybody about it because they've got a lot of ego. Right, and and they think losing money is all about shame.
They're going to post their losses, right?
They're not, but the bottom line is there are going to be some. So the best advice is that markets give and markets take away. And at the end of the day, losing money is not. It can be painful and it's disconcerting.
I like the phrase, "Did you win or did you learn?" And I think especially for a lot of these younger investors, if you have a cycle and we had some unexpected landmines in the first quarter of 2025, whatever it is between the Fed or tariffs, and you start to lose, as long as you learn that lesson, I think is most important.
And just expect volatility and you learn from it, right? And also it's I think sentiment can easily sway trading. As we get into 25, you'll see the same thing. Bears. I was getting a little concerned because I haven't seen some in a long time.
Bears? Are there any bears here?
But all of a sudden, they'll come out.
They will come out.
Once 10 years starts to rise, this is it.
Right.
But that creates the opportunities if you're able to navigate.
Right. On a day like today, they're starting to peek their heads out. They're just looking. I don't know if they're coming out of hibernation just yet.
They're not. They're just peeking out. They're just kind of tickling us. But at the end of the day, David Green and I always say to them, we've seen this movie before. Right? How many you've been in the market for 26 years?
Yep.
I've been in the market for 40 years. I've seen this before. You've seen that market where it's just never. We always joke about it, never another down day on Wall Street, right? And this year must go down in history as one of the most controversial years in so much globally, economically, and whatnot, and polarity of personalities and whatnot. Yet the market has prevailed on the upside. It's been unbelievable. Yeah. And as I went over with you, every one of the 7 pullbacks we've seen this year has been some of the best opportunities. Who would have thought that NVIDIA, after the best first quarter, was trading at $934 on March 30th, and in the first week of April, it was trading at $734.
Right.
So those moves you see, that was an opportunity. I always joke, I said, you know what the best advice is? Hire someone for $50 a day to stand behind you with a 2x4. And every time you do something stupid, have them whack you in the head.
There you go.
Love it.
Did you win? Do you win or did you learn? That's it.
You win or you learn.
Happy New Year to you
know what,
guys.
ladies and gentlemen? I think hopefully you got a lot out of this. We're going to do a lot more of these fun things next year. Live or learn, win or learn.
Did you win or did you learn?
Live or learn.
Yeah,
that too.
I like that one too.
Win or learn. You know what? We want you to have fun trading this market. There's disposable income. There's a job, a career in this business. There's something for everyone in this market. You know what? Do your homework. Watch every movie you've seen because everything has happened in history before. Very rarely will you see something we've never seen before.
True.
Right? Never think a stock can't go any higher or a stock can't get any lower. It can. And that's all I'm going to say about that. Thanks, guys. I love you. You're the best.
Way to go, guys.
Yes, sir. Boom. Einstein and Ives, Dan Ives, JD Durkin, we're out of here. Like Vladimir.